Hey everyone, I'm Mike. I'm Chief Operating Officer at Exmo. I'm happy to be here and lead the AMA session with the Gearbox DAO. Just a few words before the start. Please feel free to post your questions in the YouTube comments, so we'll try to go through them. And yeah, I mean, let's make it a relaxed and fine, friendly convo between two people who are in crypto, who are in Web3. So speaking of just a few words about Exmo, we are a centralized and regulated European crypto exchange. We've been live since 2014. We do about 60 million of daily volume. We have more than 130 employees. And at some point, we decided that we really need to provide some yield to our users who hold their assets on our platform. So why should they take the custodial risk? Why should they share it with us for nothing? So we decided to partner with Gearbox DAO to actually enable our users to earn yield on the most popular crypto. And thanks to Gearbox DAO, right now we have a earn program which allows users to earn a decent API on Ethereum, Bitcoin, and three common stable coins, which are USDT, USDC, and DAI. A few words about myself. So I actually came into crypto first in 2021. So I'm a latecomer, and me and my team we launched a lending protocol on Ethereum, and that's how I that was my onboarding into crypto. And this experience led me to understand that Web3 has lots of sources of yield for normies, for normal users who come to crypto for the first time and use centralized exchange like Exmo. And our mission is to enable those users to get this yield without a lot of hassle with MetaMask, private keys, etc. So we want to extend this partnership in the future, and we are very happy to be approved actually by the Gearbox DAO. The approval happened on the 4th of June. It's public. It's on the snapshot. And we actually very transparent about what we are doing with your funds, guys and girls. So we are supplying them to the lending pools of Gearbox, and that's how you get the yield which we transfer to you each month. Let's get into details, but first I would like to ask Muggle Sect to introduce himself and to share his background, how he got into crypto.
Hey, sir. Uh, Thank you for having us. Thank you for a great intro. Uh, Hi, everyone. I'm Muggle Sect. I'm a marketing contributor for Gearbox DAO, and I've been with Gearbox for over a year and a half now. How I got into crypto, that was back in 2017, 2018. Um, Largely just heard about something going up in numbers and then joined it, tried to make money. But as I read more about it, I got more and more interested about it, more and more interested in it. And that's how I eventually came across Gearbox, joined a Discord, saw all the discussions that were happening around risk parameters, around how lending works, how leverage works, and found it super interesting. Started contributing and eventually became a full time contributor. It's been over a year of me being full time with Gearbox now. So that's a pretty cool one. And building through Bear has been an exceptional experience. And like Mike said, the source of the yield is Gearbox. And through this call, we would try to explain to you how Gearbox works, how this earn program that's being run by X1, to be very honest, being run very well, utilizes DeFi in order to generate the yields that are required, and what's exactly happening.
Thank you. As I recall, so Gearbox was founded on the hackathon. Can you give some more background, like how the team got together and maybe what were the early days of Gearbox?
Yep, absolutely. So, Gearbox correctly was a finalist in ETH Global of 2021. Yep, 2021 January. That's where the key goal was to develop something on top of Uniswap, and that's where Mikhail, the Gearbox inventor, had the idea of abstracted accounts where you effectively turn a smart contract into a wallet which can hold funds And because you can guide a smart contract with certain parameters, you can then make sure that nobody can withdraw those funds and thus limit their use. It kind of enables leverage on chain. So that's where Gearbox was initially thought of. That was the rough idea, but it was only for Uniswap. After this, Ivan and Ilgis joined him, and that's where they started creating the idea. They started making it bigger. I first came across Gearbox in October of 2021 when they introduced it to the public and was up for testing. Tested it out. Initially, had no idea what it did, to be very honest. But as soon as I used it, I got it. I understood what's exactly happening, and that's when I was like, "Yeah, this makes a lot of sense to have in crypto." Um what Gearbox does, I'll just go ahead and explain that very quickly. So Gearbox is a composable leverage protocol. By what we mean by composable leverage is that you can take up leverage, but instead of general perp situation which you have where this leverage is synthetic, that's where Gearbox differs. Your leverage is spot. It's made up with real assets, and because it's made with real assets, you can then go ahead and use it across different DeFi protocols and earn yield on them. So to give you an example, something like Lido. Lido helps you stake your ETH and gives you STETH in return, which generates about 5% annually. Now imagine for every one ETH, you could borrow four more and stake those five ETH to get all of that yield. That is effectively what Gearbox enables. You have to pay back the borrow fee on that ETH, but the borrowed ETH, but still what you make in terms of a total APY is much higher than what you would have with just one ETH, right? And that's where the key utility of Gearbox comes in. Now, this is at a very basic level. What Gearbox wants to do is become the base layer of leverage throughout DeFi. Imagine being able to do something like this, but across the curve pools. If you're able to do something like this on Uniswap, you effectively have a spot leverage trading protocol where you do not effectively trade against the house. And this is how effectively Gearbox manages to not have just one use case, but be usable across different uh, things in DeFi.
Great intro. Let me a little bit unpack it for some folks who may be really new to crypto. So first of all, like Uniswap and Curve are the biggest, like maybe top five decentralized exchange. So unlike Exmo, they are not run by order book. So they have like a smart contract which manages the liquidity in the pools. So it's a different way to exchange basically one asset to another asset, and these are the biggest dexes out there. So stable, like Curve is specifically for stable coins, and Uniswap for all the assets. Pretty much the top exchange in the DeFi space right now. That's like first call out, so to speak. Second point is that I just want to make it clear for the users. So there are two types of accounts on Gearbox. One type of account called Ninja, which like MuggleSec was talking about, the account which is able to do leverage trading. And another type of account, so to speak, is like a simple pool, like sorry, I forgot the name, like
Yeah, passive pools.
passive pools, exactly. Passive, so to speak, passive pool account. And these accounts are not taking any leverage. So once we transfer your funds to Gearbox, we are not transfer them to get some leverage
Yeah,
and,
yeah.
to get your
Yeah,
leverage up to like 90% and expose you to the liquidation risk. So unlike that, we are transferring your assets to the passive pools, which are not leveraged up accounts, just for everyone to understand
yeah.
how it works. If you can talk a few like words about how passive
I'll just
pool
introduce
works. Yeah.
passive pools. Yeah. So where Exmo generates that yield is through the passive pools. How passive pools work is, say you have 10 ETS, you deposit them, and the lenders that and you become a lender. The ninja side that we were talking about earlier, the people who take the leverage and then stake or farm with it, those people borrow from you and pay you a borrow fee. That is the source of the yield. So the yield is completely generated by another user utilizing your funds. Uh, And that's largely it. It's really that simple, to be very honest. And that's how Expo is able to generate the yield. Gearbox approved a certain number of Gear tokens in order to boost that yield, and that was to kind of help people understand and experience what DeFi is and how DeFi is also capable of generating yields that we otherwise only get through banks and similar stuff, and bring it to crypto.
I want to really emphasize what you are saying because it's really super important for for the whole Web3 and for the whole economy. In real world, there are, if you are living in a country, whether it's in a US or like Ukraine or Italy, whatever, they have central banks, and the central banks decide the fund rate, basically the rate at which the banks borrow money, and this rate defines essentially the the percent of deposit that you get if you are a depositor, and the percent of credit if you're like taking out a mortgage, for example. But in crypto, the rates are not driven by any like central bank or like authority or Muggle sect or Ivan or whoever else. They're really driven by the market. So it's real marketplace of of assets. So if there are more borrowers who come to Gearbox to borrow like assets there, the rate will go up. There is no magic, there's no one to print more USDT or USDC for you and
Yep.
like you transfer it to you guys. So that's the whole idea of crypto, in my opinion, one of the core tenets, I would speak. So it's really programmatic. It's just the smart contract which defines the rate, and it's transparent. Anyone can see it. And as Muggle Sect pointed out, so the yield which we are effectively like transferring to you after you deposited your like Bitcoin or whatever else has two components. One component is this native yield which comes from the borrowers. Another component is the like incentivized yield which comes from the Gearbox token themselves. And like this again, this is very transparent, also stated on the Gearbox protocol front end. So we've been very transparent with that. Yeah. Do you want to add something to this?
Yeah, actually, I would like to add a very nice point to this. So, when you usually lend to a bank, the issue that you can have is that you have credit risk. Credit risk means that whoever the bank lends your money to, they might not pay back, which is how a bank can become under collateralized eventually if there are too many NPAs. But in crypto, and especially on Gearbox, how it works is the people who borrow your funds, because like I said earlier, the money goes to a smart contract. They can never withdraw your funds. They cannot even take your funds to a pool or a different protocol, which is too risky. So in terms of safety, we would rank much higher because we have an instantaneous repayment method. If somebody is to be liquidated, the money of the lender would instantly come back to the lending pools. And this is why we have been live for almost 2 years now, and we have not had any incidences in terms of bad debt or any hacks at all. It's simply because of the kind of security and the risk framework model that this provides you. So a lender's money is actually never lent out in terms of a borrower completely custodying it.
Terrific point. Very, 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 yeah, very insightful. Thank you for that. Really, you mentioned like the liquidations, and I think there are around 55, 58 liquidations which happened during these 2 years. Can you
Yep.
give a little like overview how the liquidation works? Do you like go again to a central
Yep.
bank and say, hey, liquidate this account, please, like call him,
No, no,
somehow find the owner of this wallet, and
no.
like withdraw funds? So like how does liquidation work?
It's all done by smart contracts, honestly. Like, we don't do much. So we have chainlink oracles that are linked to every account. They help determine the health of an account. So if somebody is at 10x leverage and the account goes down by say about 9.5%, they will be liquidated at that point in order to make sure that none of the user funds, the lender's funds, are at risk. And that's largely how it works. It's pretty simple. And it's completely
Great point.
governed by smart contracts. So there's no 3AC messaging somebody saying that, hey, don't
Right,
liquidate us. If you are at a liquidation point, you will be liquidated.
right, right, right. Awesome. One more question that I constantly hear from someone who just came to DeFi like a few months ago is like, why the rate, why the API rate is not stable? Why can't you have like a weekly or monthly rate of like for supplying an asset or for borrowing an asset? So if you can like give a quick
Yep.
answer.
So there are multiple reasons and they differ across protocols. I'll just answer this for Gearbox. So, like we said, right, Gearbox works basis utilization of funds. So, how the rate is determined is that for every level of utilization, you get a certain interest rate at that level. It's just basic demand supply economics, right? I mean, if you're at 85%, you would get 85% utilization, you would get 3.5% APY on Ethereum. But if it rises to say 90, that is where you will be able to make 4.3. It is to make sure that if the demand goes higher, then the supply does make that additional money that it needs to. And that's why it varies. Though I would like to say that there are fixed rate protocols as well, which you can explore if that's something you're interested in. It's just that when you operate a fixed rate protocol, uh, they either design an AMM that can convert a variable rate into a fixed one over a certain period of time, or they kind of take on the risk to make sure that the utilization is at 100% in order to make sure that they are able to lend out all the money that needs to be paid back in terms of interest as well. So that's largely it.
Sure, gotcha. And just to think like the rate, the APY supply rate is updated basically every Ethereum block, which is like 12 seconds. So
Yeah.
every again, just for the newcomers. So imagine like a spreadsheet which synchronizes every 12 seconds, which this is like the ledger of Ethereum, which synchronizes every 12 seconds, and every 12 seconds where there might be different proportion between users who want to borrow ETH and who want to supply ETH. And this proportion defines the actual supply rate and the actual borrow rate. So that's essentially how it works. So and for different blockchains, this like block time is different, but Gearbox is on Ethereum right now, so this is the actual time it takes to between the
Yeah.
blocks. Yeah, 12 seconds. Cool,
What users
cool.
can actually do is maybe just go either on DeFi Llama or the native protocol that they're interested in and actually check over different time periods what the APY has been, and that's usually a safe enough parameter to understand what they would be able to make.
Okay, gotcha. Let's speak about the risks because users,
Yep.
especially the crypto winter, everyone is asking about like, may I lose my whole deposit? Like, what are the risks? What if I get blocked in my home country, or like again Italy, Moldova, whatever it is? Can you give us a few like risks that are publicly known in lending
Yep.
protocols such as Gearbox?
Absolutely. How I would like to actually show you this is through risk.gearbox.foundation. And very honestly, I completely agree with the risk that you're talking about, right? I mean, governmental risks are there, smart contract risks are there, Oracle risks are there, multiple risks that are involved in crypto. Uh, a lot of these exist because either we do not have the infrastructure at the moment or because we are still quite new in terms of this technology, right? So there are a lot of evaluations, a lot of developments, and with this development, there is usually a certain higher amount of risk that is involved. Coming back to the kind of risks that you would see on Gearbox, uh, say something like an oracle risk. That is where an oracle deviates and leads to incorrect liquidations. Something like that is possible. It hasn't happened yet. So you have to kind of build a system that is resistant to it. How you do this, I would honestly leave that up to the devs. I know there's some tech that they have developed for it. I'm not entirely sure, but we have a monitoring system that's in place. So if at any place something like this happens, on a public page itself, you will be able to see that something has happened. That page is called risk.gearbox.foundation. Apart from this, we have collateral risks. Collateral risks is where the collateral that you take and the collateral that you borrow could change in prices and stuff like that. There are market risks in terms of the volatility that the market leads to, the kind of liquidity that the dexes have. So if you have to liquidate an account, you effectively need the market to be liquid enough so that uh, the overall funds that you're able to get back from the liquidation are still above the borrowed funds, right? You need to return the borrowed funds back to the pools. If in case the liquidity in the market falls, you won't be able to return those funds. So you have market risk, you have oracle risk, you have collateral risks, and then the front end DNS risk that pretty much all of internet, all of web have. They exist. Then yeah, governance risk are one from the protocol itself, where we have in the past seen that people try to acquire a larger sum of the tokens and create governance proposals which are not completely good for the protocol itself, but uh, they inadvertently help out the person who's trying to exploit the protocol. And second, from the government of the country and things like those, where you have the regulatory risks present. So these are the kind of risks that you can often see in crypto.
Thank you. Really great overview. Let me quickly go through. So first of all, like speaking of front end risk, luckily for the users of Exmo, you are not exposed to this risk because we essentially like provide your assets to the smart contracts of Gearbox DAO without interacting with their front end. So we are interacting with the smart contracts themselves, and you are not exposed. For example, like there is a common like DNS hack where a hacker like he how do you call it he leads you to another website,
Yeah,
another front end,
it change in the DNS.
pretending yeah, he changes the DNS, and essentially he
Yeah,
pretends that this is the front end of Gearbox, which is not, and you are providing
exactly.
essentially supplying assets to another smart contracts, which are like the hackers usually wallets. They usually wallets of hackers. So
Yeah,
again, luckily for the users of Exmo, you are not exposed because we essentially like we aggregate your funds and we move them on the blockchain to the smart contracts which are on Ethereum
yeah.
blockchain, and they're
It's
verified. So
quite similar to how in Web2, like if a hacker takes over the DNS of a website and they make you put your credit card information in, they can steal money from your card, right? And the same applies to crypto. If a hacker is able to take over or change the DNS on your website and direct themselves to different contracts, they can take money out of your wallet. So that's how the similarity I think exists.
right. Speaking of the Oracle risk, again, trying to make clear for the speakers. So
Yeah,
imagine you need to know the price of Ethereum, and how do you know it? Is it like 1900 or 2000 or 2000 or 3000? I mean, how do you do it? So usually, what protocols do, like Gearbox, I think you're using Chainlink Oracle, which is
yeah,
actually the best in class, the super well funded, like very like I would say like one of the top really crypto companies in the world, which essentially has a network of users who essentially like providing prices for the assets, and they providing prices for the assets like this. So they go to Exmo, they go to Binance, they go to KuCoin, they go to all the centralized exchanges, and they also go into all the decentralized exchanges, and then they aggregate and like using some math formulas, they aggregate the current price at the current Ethereum block for the Ethereum. And this price is coded in the smart contract, which calls the price feed. And Gearbox uses this price feed to know the price of Ethereum. And to make this to hack these systems, quote unquote, you need to really to change the price of Ethereum or any other asset on like on many centralized exchanges and decentralized exchanges. And
yeah,
it's really it's practically it's possible, but it's really hardly, very hardly doable. You need to be like a
For
citadel
more,
and move all your funds, to change this price of a very liquid asset. In terms of a
yeah,
illiquid asset, maybe like a token with market cap of, I don't know, like 100,000 bucks is definitely much easier. But on Gearbox, they have mostly like very liquid tokens, like
yeah, we are extremely limited in the number of tokens. We are largely limited pools, to be honest, and I would say the we do not have any volatile assets at the moment. Curve V2, our most volatile assets would be the Curve token, Convex token, and the Lido token. So even those aren't some tokens that you can manipulate too easily too much.
gotcha. Yeah, yeah, great point. One topic which is also like brought up a lot, speaking of risks, so the security audits, they
Yep,
cost a lot for the people who don't know.
absolutely.
They can cost like 200,000 bucks just for one audit. Like by a like top
Yep.
auditor like Open Zeppelin or like yeah whatever else. So it's really super. I mean, it's an expensive investment from anyone who wants to launch its protocol. So why did you invest in three, or I believe like maybe more audits and
So Gearbox
mhm.
till date has actually had 7 audits. Uh, yeah, 7 audits to be exact, and then two more are underway at the moment for V3. And audits are important. Audits effectively go ahead and deeply check the code that you have, the risk framework that you have, they're correct. And that's vital. Why you get multiple audits is because you can never be certain enough, to be very honest, even with audits, right? Everybody can try their best, but the co uh, but it but you can't ever say that it's 100% secure, right? Because you can never be sure that something is 100% secure. This isn't just for smart contracts, this is true for all of internet. On no website can you ever say that this website is 100% secure. So you kind of try to go to as many great auditors as possible to get the best possible results and make your code as strong as possible as you can. Because at the end of the day, your code is a guard for millions in TVL. Even a small lapse can cost so much money to so many users that you must avoid it at any cost. Gearbox on just security is probably where we spend about 50 to 55% of all of our money. We have spent probably over $1 million on audits alone, and that's by far our biggest spend. And yeah, audits are definitely extremely important, but they are not all of it. Apart from an audit, we also have bug bounties with Immunify and multiple other protocols. We have the Gearbox Foundation, where you can make sure that everything that's happening on chain is documented properly and is open to public. That's what makes a DAO after all. And then yeah, beyond that, we also have a multi-sig that checks the code being deployed is this same one that was audited. And as a final measure, we also have insurance available by Nexus Mutual, and that you can buy for about 2.5% of the cost of your position, and that will secure whatever funds you have. So even after all the actions that we take in order to make sure that your money is safe, by any chance, if a hack happens, your money can still be secure.
Great to know. It's a good segue to the next question. Like, what is Gearbox DAO? What is the relation between the protocol and the DAO? Like,
Oh yeah, that's
yeah.
a good one.
Can you give a quick answer to this?
Absolutely, this is a good one. So, Gearbox protocol, like the name suggests, are a set of rules that will create the base layer of leverage. To make it very simple, right? It's all the code, all the dApps, all the contracts. They together make that protocol, and that protocol is called Gearbox protocol, the base layer of leverage in DeFi. Gearbox DAO is effectively the decentralized autonomous organization that owns Gearbox protocol. All the deployments that happen through the Gearbox DAO. Gearbox DAO is a decentralized identity that takes care of the development, the maintenance, the security, and everything that's related to Gearbox protocol.
Got it. Got it. Yeah, great explanation. Um, you also mentioned one important point, like the Gearbox V3. So what are the next steps for you guys in terms of like your internal or like public roadmap? So what's the next features that they're about to launch?
Yep, absolutely. So I'll go ahead and explain it. And this will also be a callback to what we discussed initially. So we talked about the earn program and how people are able to make certain organic interest rates, right? So these interest rates on blue chips are always low because, to put it very simply, the risk is very low on these. So the borrowers are not interested in paying too much, and the liquidity is high. What this translates to is that they won't pay you too much to borrow your funds. So the next steps for Gearbox is to increase our lending market in a manner, grow our lending market in a manner that we can make it more lucrative for lenders to actually lend the funds, to be able to generate 10% organically without any token support. How are we going to do that? One, a much stronger uh, risk framework. So Gearbox V3 will introduce something called quotas, which is where we can limit the risk that we take up on each and every token. So if we know that there's $3 million worth of liquidity on a Curve token, we can limit the exposure of Gearbox protocol to Curve to about 2 million, say something like that. These are just random numbers that I'm talking about. The actual ones could differ vastly. But once we have that, what that means is people can now lend in their Curve tokens. People can now borrow Curve tokens. And now, since you're taking more risk, and if you just look at the organic rates of Curve token across different protocols, they would now be ready to pay 6 to 7% to the lenders, right? Because they would be able to generate a lot more. So it's still a much profitable, much more capital efficient thing for them. At the same time, the lenders make more money. This will be part one, the Curve V2 pools that we will be launching soon. Then when V3 comes in, that's where we will add Balancer and Aura, which would enable users to access a lot more pools, a lot more strategies, and again grow the lending market basically. Uh, Apart from this, we will also be bringing in Gearbots. Gearbots is a very unique concept, to be honest. We have seen trading bots recently go up, but what happens with those trading bots is they require your private key. Your private key is something which is the only access point to a wallet, and your wallet holds all the coins, all the funds that you have. You should not be giving it away under any circumstance. Gearbots on chain make automation and automated trading happen. How do they do that is slightly complicated. I would suggest you to go to the Gearbox Twitter page and read about it. We made a post on Monday, and it's a very interesting mechanism of automating smart contracts. And as a final bit, we will also be adding the tokenomics for the Gear token, where you can stake your Gear token and effectively have on-chain governance for the split of the fee that will be generated, the additional fee that will be generated with the higher APY pools of Curve and mid-tail assets. These pools will be called alpha pools. And yeah, so you'll be able to dictate how the fee that you generate from this is split between the lenders and the leverage takers. And the third thing that we'll be introducing will be the Gearbox spot leverage trading protocol. So at the moment, Gearbox entirely focuses on leverage farming. Why? We saw early PMF in it. We thought that we could capture a significant bit of the market from it, and at the same time, it gave us certain amount of time to battle. So it's really going to be that simple. And this is where the lending part comes in. So if you look at a general perpetual app, that is where users pay even 10, 15, 40% in terms of borrow rates, right? So these rates would be going back to the pools from where the users borrow, and thus again grow the lending market massively.
Amazing. Lots of products, lots of
Yeah.
features to unpack, and we again, hopefully we'll introduce some of them to our users. Definitely, like bots. We've been thinking about this for a long time. How can we automate, maybe high risk, high reward uh, strategies for the users, and also like low risk, low reward strategies for the users. And if you can use bots for that, it'll be amazing. So let's definitely think it over. Just one more question of the record. Do you plan to launch on any L2 or any other blockchain? Maybe it's like lower fees, or do you like Ethereum Maxi, only Ethereum, nothing more?
No, so very honestly, all of this is in the open. We have a governance forum where you can check anything and all of the work that happens. Nothing in a DAO is gatekept. We had a discussion on this. Even some of the L2 team members, the L2 products that we have today, joined in and pitched and put in like their responses to it. But the issue is liquidity, like we talked about, right? Like we need dexes to have liquidity. At the moment, there aren't too many L2s that have the kind of liquidity across DeFi protocols that would make deployment of Gearbox or similar protocols safe enough, I'll say. So if you look at the liquidity on an Ethereum pool on ETH Uniswap itself, the liquidity in itself is closer to, I think, it's pretty high. It's, I think, almost close to nine figures. But say on something like Optimism, it's really just seven figures, right? I mean, that's where you do not have the safety. And that's where the lent funds can be put at risk. That is something that we absolutely have to avoid, and thus till L2s grow out a little more, and till bridging itself grows out a little more. It would be a hard task to do that, but definitely not impossible. If we wanted to, we can deploy maybe even in a few weeks if a DAO vote goes through. But that's a DAO action to take.
Great point. Totally agree with you. Speaking of DAO, I would like to stress it. So if I mean, I made an open letter to the Gearbox DAO forum, like open message, and like invited everyone to comment on that. And if you go to any other lending protocol or any other DEX and go to their forum or Discord, so what they'll ask to do like is please like contact our representative, like business development manager, and like discuss the terms with him first, and then like come back maybe to the DAO. And here I would really like to stress it. So it's not only me. I seen other exchanges which approached you, and the response was always the same. So you have to make a public proposal so that all the DAO participants see it and can comment on that. And I think again that's one of the core tenets of Web3 and crypto. So like the openness and the decentralization, which is not only in the code but the way the people do partnerships with the way people do business. So again, kudos to you and your team. So I think that's how it should be.
I absolutely agree with that. That's, I think, one of the key parts of being a DAO. Nothing should be gatekept, and if somebody is going for an initiative and it does make strategic sense, have an open discussion on it and then just put it to vote. I think
Right.
that just makes things simple. To be very honest, it
Right.
might seem complicated, but it's just very simple.
Totally agree with you. Last question from my side. Uh, what's the future of DeFi? Okay, or like what what keeps you excited right now at the moment in the whole like DeFi space? Is it like a new ZK rollup or a new like primitive or whatever else? Like, what do you think is interesting beside lending, of course, which you're working on, or
Yeah.
maybe?
To be honest, all of DeFi, right? I mean, I have a much more macro view of why I like DeFi. To be very honest, and I'll just sum it up in that manner. Um, if we want to create an alternate financial side to things, a truly digitalized, decent, you need then protocols that can bring value to that currency, right? You would want to borrow against it. You would want to do things with it. You would want to do things with other cryptocurrencies as well. And that's what DeFi enables. DeFi enables you to borrow against your Ethereum. DeFi enables you to leverage up your Ethereum. DeFi enables you to borrow Ethereum itself. DeFi enables you to earn interest on your Ethereum by staking it. So there's so much that you can do. And the good part is that it's permissionless, which makes it composable. Gearbox is not just a single protocol. We could not function as a single protocol, right? We had to had die from maker, put into Gearbox, and which is then borrowed by a user and then put further onto Curve, and maybe within the middle of that Uniswap is involved. So it's like four protocols are needed to deploy one position, right? That's composability for me, and that on DeFi is so much more easy than any TradFi world, where if you want four different banks or four different applications to function together, you would probably have to talk to maybe like 35 managers, get their approvals, get things going. On DeFi, it's one click, and it's the same for all. We do DeFi does not differentiate whether uh, you're a high net worth person who is able to get a lower rate because you're well connected. DeFi only cares about what you have and what the utilization is. What the rule suggests are the rule. The code is law.
Amazing. I totally share your vision because lots of people, like lots of opinion leaders, they constantly tell us like, okay, like DeFi is great, but we need to have social fi, we need to have metaverse, etc. But really, the founding layer is still like the DeFi. You have to move assets between chains, between users. You have to,
Yeah,
as you said, like have various use cases for your assets, and we need
absolutely.
to first like to have this like adopted by many users, many institutions, and then on top of that, we can build like a new Twitter, a new like TikTok, Tinder, or whatever else. So, like on the one hand, like everyone is trying to to move away from DeFi, but on the other hand, you can't move away from it. It's the foundation. It's really because I mean, fortunately or unfortunately, money and assets and like owing stuff plays an important role in our lives. So that's how we can accumulate the results of our like work through money. And if
Absolutely.
yeah, and that's really like super important stuff. So again, thank you for sharing this. I think it's the core of Web3 and the core of crypto to have like very efficient and decentralized DeFi foundation layer. Uh, Muggle Sect, my honest and sincere thank you for having this call. I see no questions in YouTube, but if you have any questions, I'm ready to answer. Okay, let's wrap it up. Wrap it up. Many thanks for your participation. So let's keep it up. Let's continue our partnership. And it was great, really, to hear the story of Gearbox and your vision and the features that you're about to launch. So let's stay in touch. Thanks, everyone.
Absolutely, boss. Thank you so much for having us, and thank you for running such a great program.
Thank you.
Honestly, have worked with a fair few people, and Exmo does seem to be way more professional and way more clear on what it wants to do. So yeah,
Thank you.
been a great
Thank you.
experience.
Thank you. Great to hear that. Bye bye.
Bye, sir. Take care.
Thank you.